Let me start macro and then I'll drill in. So we're coming up on the 30th anniversary of the firm. We've done to date about 6 billion of real estate investments in 8 countries. About just under 5 billion of that is in Latin America. Vast majority of that is focused on for sale, affordable, low and middle income housing. We've developed about 40,000 housing units in 7 countries down there. With great success. It's just a huge demographic driven opportunity that withstands the election of questionable presidents. So it's a very politically resilient strategy as well, because the one thing that the countries do well down there, they recognize that housing is so key to economic development. It is here. House ownership, that's the single most important investment that most families can make, and the single most important legacy that you can leave to your children is the home that you live in. So here in the States, we've done just under $1 billion in apartments, and which has by far been our most successful strategy. We've made 90 value-added apartment investments all across the U.S. Half of those were in prime institutional markets like Atlanta and Dallas and Austin and Phoenix and elsewhere, and the other half were here in Southern California. The Southern California portfolio has been among our best performing assets. We've round tripped 83 of those 90 investments. We've generated mid-20 IRRs net to our investors. In SoCal, we're among the best investments here. We, knock on wood, never lost money in Southern California. And so it's been one of the most successful and resilient strategies for us here in the States. It's just under 15,300 units. Most of the 6 billion has been backed by institutional capital. And I have 2 institutional investors in the last 3 properties that we've acquired. But I think that this strategy, particularly the downside protection aspect of it, appeals more to a high net worth, to an individual investor than an institutional investor. Even though institutional investors will tell you they're keen on downside protection, I don't think that it's not really their money, and they're not really compensated. Because if the market goes down and everybody goes down, they're not going to get penalized. Nobody's bigger than the market. But if it's your own capital, if this is your retirement that you're putting into it as an individual, you place a lot more value on that. And because of the fact that Jim and I and the other partners here at Paladin, we have to put our money where our mouth is. We have the lion's share of our net worth is alongside our investors in every one of our strategies. I can't afford to lose that. I want to be able to send my kids to college, and I want to be able to, leave, have some at least choice to retire. I doubt that I ever will, or will be able to, or will want to, because I'm having too much fun as Jim is.